Welcome back to our channel. In today's video, we will dive deep into the world of Fidelity Index Funds. If you're looking for a safe and smart way to invest without spending endless hours on stock research, you're in the right place. Fidelity is renowned for its reputable and low-cost index fund options. We'll guide you through the ins and outs of investing with Fidelity Index Funds. Understanding index funds. Let's start by understanding what index funds are. An index fund is a pooled investment vehicle that provides instant ownership in a variety of companies through a single purchase. These funds are designed to track specific indexes like the S&P 500, Nasdaq, and Dow Jones. For example, an S&P 500 index fund will include the 500 companies listed in the S&P 500 index. Criteria for choosing Fidelity Index Funds. When selecting Fidelity Index Funds or any index funds for that matter, there are a few crucial criteria to consider. 1. Expense ratio. The expense ratio is the annual fee deducted from your investment. It's important to aim for a low expense ratio, preferably under 0.2%, as this fee can significantly impact your overall returns over time. 2. Automatic dividend reinvestment. Dividends are a key part of investing, and reinvesting them compounds your returns over time. Opt for Fidelity Mutual Funds over ETFs as they offer automatic dividend reinvestment, enhancing your compound interest effect. 3. Transaction fees. Transaction fees can eat into your returns, so it's wise to choose funds that don't charge any. Fortunately, if you're a Fidelity account holder, investing in Fidelity funds, you won't face transaction fees. Best Fidelity Index Funds. Now let's take a look at some excellent Fidelity Index funds that meet this criteria. 1. Domestic stock. Fidelity Total Market Index Fund. Expense ratio 0.015%. 2. International stock. Fidelity International Index Fund. Expense ratio varies. 3. Emerging market stock. Fidelity Emerging Markets Index Fund. Expense ratio 0.075%. 4. U.S. government bonds. Fidelity Intermediate Treasury Bond Index Fund. Expense ratio 0.03%. 5. Inflation Protected Bonds. Fidelity Inflation Protected Bond Index Fund. Expense ratio varies. 6. Real estate. Fidelity Real Estate Index Fund. Expense ratio 0.07%. Crafting your investment strategy. Now that you know the criteria and have a list of recommended funds, it's time to develop your investment strategy. 1. Asset allocation. Your asset allocation is key, how you distribute your investments among different funds. You can follow Jack Bogle's rule by subtracting your age from 100 to determine your stock allocation percentage. Alternatively, David Swenson's approach suggests diversifying across various asset classes, including equities, bonds, inflation-protected bonds, and real estate. 2. Example strategy. For instance, if you're starting with $10,000, you could consider investing $7,000 in the Fidelity Total Market Index Fund or domestic equity and $3,000 in the Fidelity Intermediate Treasury Bond Index Fund or U.S. Treasury bonds. This would give you a 70-30 allocation in line with Bogle's rule.